Welcome back, listeners. Today we're going deep, really deep, into some fascinating data coming out of China, specifically the world of AI-powered credit tech.
Sounds intriguing.
Oh, it is. We've got Qifu Technologies Q4 and full year 2024 results presentation hot off the press from March 2025.
It's pretty fresh then.
Exactly. And our mission, should we choose to accept it, is to dissect this presentation, pull out the key insights, and figure out just how this AI-powered credit tech platform is doing and what their plans are for navigating the Chinese market.
A worthy mission.
Absolutely. But before we go full speed ahead, a couple of things to keep in mind, just as the presentation itself highlights.
The disclaimer stuff.
Yeah, that's right. This is all just for information. Things can change, and we're not offering any financial advice here.
Always good to remind people.
Definitely. And they do make a lot of forward-looking statements, which, as you know, come with their fair share of risks and uncertainties.
The future is never certain.
And one more thing, they do use some non-GAAP financial measures.
Ah.
Now, for those listening who might not be familiar with that term, it basically means they're using some calculations that aren't standardized. So comparing their numbers directly to companies that calculate things differently might not be apples to apples.
Good point. Makes sense.
Okay, now that we've got the disclaimers out of the way, let's get into the heart of it. Qifu Technology, what's their deal? What are they all about?
Their mission statement, they're pretty upfront about it. To enable a better life for people by facilitating safe, convenient, and inclusive financial services through AI-empowered technologies to financial institutions. It's a bit of a mouthful, but you get the idea.
You can definitely sense the ambition there.
Yeah.
And they call themselves a leading AI-empowered credit tech platform in China. Seems like AI-empowered is a key phrase for them.
It is. And we'll see that emphasis on AI coming up again and again as we dig deeper.
All right, let's talk numbers. What did they actually achieve in 2024? Give us the big picture.
So the numbers tell a story of, well, significant growth and strong profitability. Their total net revenue for the year hit RMB 16.2 billion.
Wow, that's substantial.
It is. And their non-GAAP net income came in at RMB 6,416 million, with a non-GAAP return on equity that's ROE of 27.9%.
Impressive figures. Anything else that particularly stands out to you?
What's really striking is their year-over-year growth. Their non-net income jumped by 44.0%.
A huge leap.
Right. And total net revenue also saw a solid increase, up 5.4% year over year.
So growth across the board. Now, what about reach? How many users are we talking about? How many institutions are they working with?
By the end of 2024, they had a pretty substantial user base, 56.9 million cumulative users with approved credit lines.
That's a lot of people.
It is. And they're not just working alone. They've got a network of 162 financial institution partners. Plus, they're keeping their shareholders happy with a recurring dividend.
You mentioned shareholders. It looks like they've been actively returning value. Tell me more about that.
Absolutely. They've been buying back their American Depository shares, or ADSs. Those are shares of a foreign company traded on U.S. stock exchanges. And they've bought back a total of U.S. $586 million worth from June 2023 to March 2025.
That's a significant chunk of change.
It is. And through these buybacks, they've managed to reduce their share count by a whopping 16.5%.
So less shares out there means each share is worth more. Smart move.
Definitely. And their dividend per ADS has been steadily climbing from USD 0.54 in 2021 to USD 1.3 in 2024.
Wow. That sends a pretty strong signal to investors.
Indeed. They're committed to delivering value back to their shareholders.
Okay, so we've got a picture of their financial performance and this shareholder focus.
Yeah.
Now let's dive into the nitty-gritty. How does this AI-empowered credit tech platform actually work in practice?
They're essentially in the business of empowering other financial institutions.
So not just lending themselves.
Right. They offer these tech solutions that cover the entire lending process, everything from helping banks and lenders find potential borrowers to assessing their creditworthiness and managing all the services after a loan is made.
So the full spectrum.
Exactly. And when you think about those numbers we mentioned, 56.9 million users with approved credit lines and 162 financial partners, it gives you a sense of the scale of what they're doing.
That's a lot of data and a lot of relationships to manage.
Precisely. They operate using both capital-heavy and capital-light models.
What's the difference?
In the capital-light model, they're mainly the tech guys. They connect borrowers with financial institutions who actually provide the money.
So they're the matchmakers.
In a way, yes. And in the capital-heavy model, they might take on more of the credit risk themselves, depending on the situation. And underpinning all of this is their core technology platform, which they call ICE, the Intelligent Credit Engine.
ICE, catchy name.
It's their AI-powered brain, basically.
Fascinating. Now, it seems they're particularly focused on a certain segment of borrowers. Tell me about that.
Yes, they're big on making credit more accessible and affordable for underserved borrowers. And when you look at their demographics, it's pretty clear who they're targeting. About 81% of their users with approved credit lines are in Tier 3 and 4 cities in China.
So not the major metropolitan areas.
Exactly. And 70% are under 40 years old.
Interesting. Are these people completely new to credit?
Not necessarily. What's interesting is that about 60% already have some form of credit history, maybe a credit card, a mortgage, or an auto loan. And importantly, they have a track record of making repayments.
So they're not completely unproven borrowers.
Right. They might just not be well served by traditional banking systems.
Okay, I get it. What about what people are using these loans for? What are the typical use cases?
The presentation highlights things like home improvement, travel, buying clothes, groceries, electronics, even entertainment.
So everyday expenses.
Pretty much. The average loan amount is around RMB 8,100, and they typically have a term of about 10 months.
That makes sense. Now, something that really struck me was their repeat borrower rate. A whopping 93.9% of their loan volume comes from people who've borrowed from them before.
It is quite impressive, isn't it? That's a clear indicator they're doing something right.
Absolutely. What do you think contributes to such high user loyalty? Is it the user experience, the competitiveness of the loan terms, or perhaps the effectiveness of their AI-driven personalization?
It's probably a mix of all those things. You know, their AI could be really good at tailoring offers and experiences that resonate with users. And the fact that many borrowers already have some credit history suggests they're responsible borrowers who find Qifu's services convenient and reliable for their needs.
Right. It's about meeting people where they are and offering solutions that fit their lives. Now, the presentation talks about how their business model has evolved. Give us a quick rundown of that journey.
Sure. They started out more as a referral service, connecting borrowers to institutions.
Simple beginnings.
Right. But they've gradually shifted towards providing more comprehensive technology solutions. And as we mentioned earlier, they're sometimes taking on some credit risk themselves, especially through their Fuzu microcredit entity.
So they're becoming more than just middlemen.
Exactly. Their whole trajectory is moving towards these tech-driven models where AI and data analytics are central.
Makes sense.
And their revenue model reflects that too.
Yeah.
It's gone from just service fees to also include interest income from the loans they're funding.
So diversifying the revenue streams. Now, let's talk market size. China's a massive market, but what's the specific potential for this type of business?
They cite some interesting data from an iResearch report. They estimate the consumer credit tech market in China to be worth a staggering RMB 6.0 trillion.
Trillion with a T.
Yes, and they project a compound annual growth rate, that's EAGR, of 35.9% between 2021 and 2026. That's huge growth potential.
It is. What about small and medium-sized enterprises, the SMEs?
Another substantial market, estimated at RMB 5.2 trillion, with a DAGR of 9.2% over the same period. Clearly a lot of opportunity there.
So plenty of room to grow.
Yeah.
But to tap into that, you need effective user acquisition strategies. How are they finding new customers?
They've got a pretty diverse approach. They still use traditional methods like referrals and direct sales force for more complex cases, but they're really leveraging AI in their online advertising.
Makes sense in today's digital world.
Exactly. They've partnered with leading internet platforms using their, get this, RTA DMP marketing system. RTA stands for real-time advertising, and DMP is data management platform.
Sounds pretty high-tech.
It is.
Okay.
Basically, it's all about using data in real time to target the right people with the right ads across different platforms.
It's very targeted.
Yes. And they're also big on what they call embedded finance.
Meaning?
They've integrated their services into 56 other online platforms and financial institutions. Think everything from short-form video apps to payment platforms, e-commerce sites, even ride-hailing services.
Wow, they're everywhere.
That's the idea, to be where the users are. And this strategy seems to be paying off. They've amassed 56.9 million cumulative users with approved credit lines and 34.4 million cumulative borrowers as of the end of 2024.
That's a pretty remarkable reach. Now, let's talk about the quality of the loans being facilitated. What kind of track record do they have?
They're quite proud of their proven track record of consistent execution with stable asset quality, as they put it, and they back it up with a chart showing their 180-day plus delinquency rates by vintage.
Remind us what vintage means in this context.
Sure. Basically, it means they're looking at loans originated in a specific period, say a quarter or a year, and tracking how they perform over time. This helps them assess the quality of loans originated at different points.
Got it. So what does the data tell us?
What we see are generally low and stable delinquency rates across different origination periods up to the most recent data. This tells us they're pretty good at assessing and managing credit risk. And their loan facilitation volume has grown significantly too, from RMB 31.0 billion in 2017 to a massive RMB 322.0 billion in 2024. So they're scaling while maintaining quality, which is impressive.
Very impressive. And this all circles back to what seems to be their secret weapon, AI. How does AI actually fit into their credit risk assessment process?
It's all about what they call the dual flywheel effect. The idea is that every loan they facilitate generates more data points.
Okay.
This feeds into their AI algorithms, making them better and better at predicting creditworthiness.
So it's a self-reinforcing cycle.
Exactly. As their predictions get more accurate, more financial institutions want to partner with them because they see lower risk. This brings in even more borrowers, generating even more data, and the flywheel keeps spinning, getting faster and faster.
I love that analogy.
They're really proud of their superior AI-driven credit assessment engine, Argus. It uses over 200 million what they call multimodal customer insights. And that's not just numbers, it's voices, texts, videos, images, all sorts of data points.
So they're painting a really comprehensive picture of each borrower.
Exactly, like a detective gathering evidence from all sorts of sources. This massive amount of information feeds into their proprietary credit scoring system, which spits out scores from A to F.
So they're not just relying on traditional credit scores.
Right, they're going much deeper, and their AI operations are massive.
How massive are we talking? They mentioned over 2,400 AI models. Is that a lot?
It's a huge number, indicating a serious commitment to AI across their business.
And those models are using advanced technologies like machine learning and deep learning.
Absolutely. And the impact of AI goes beyond credit assessment. They say about 30% of their software code is auto-generated by AI, and a large chunk of their marketing materials, 74% of graphics, and 27% of videos are created by AI. Even their ad placement is 40% automated by AI.
It's mind-boggling how much AI is woven into their operations.
Right, and they have these AI-powered tools for their teams, like Copilot for customer service, which has high usage rates and accuracy, and Xiaoqi, their 247 AI-powered customer service agent.
AI is touching every part of their business. They make a pretty strong case for why credit is such a good fit for AI. Can you summarize that?
They basically argue that credit is a natural and perfect use case for AI empowerment. They cite a few reasons. There's tons of digital data available. Millions of credit and repayment events provide training data for AI models, and it's possible to automate loan processes, making things smoother and more efficient. All of this can lead to better outcomes for both lenders and borrowers.
Makes sense. It seems like AI is the key to unlocking the full potential of credit. Now, let's talk about the future. What's the strategic vision?
They call it the One Core, Two Wings strategy, with the aim of becoming a respected global fintech company. The core is their existing credit business in China.
Solid foundation.
Right. And the two wings are where they're looking to grow, providing fintech solutions to other financial institutions and expanding internationally.
So building on their strengths and branching out.
Exactly. And underpinning all of this is their AI Plus strategy, continuing to integrate and advance their AI capabilities.
AI is at the heart of everything they do. Now, looking at their One Core, Two Wings strategy, those two wings, fintech solutions for FIs and overseas expansion, those seem pretty key for long-term growth. Anything specific about their plans or potential challenges in these areas?
Well, they want to leverage all their AI and tech expertise to help other financial institutions in China improve efficiency and manage risk better. That's the fintech solutions part. As for overseas expansion, the details are a bit vague in this presentation, but it shows they have ambitions to go global.
Makes sense. Going global is never easy, though.
Of course not. There will be challenges like adapting their technology to different regulations and competing in new markets. It'll be interesting to see how they navigate that.
Absolutely. Now, let's zoom in on their Q4 2024 performance. What were some of the highlights?
Their user base kept expanding. Cumulative borrowers stayed steady at 34.4 million compared to Q3 2024, but up from 33.1 million in Q4 2023. Same story with cumulative users with approved credit lines holding steady at 56.9 million, but up from 50.9 million a year earlier.
So continued growth year over year.
Yep. Loan facilitation volume also increased to RMB 89.9 billion, up from RMB 82.4 billion the previous quarter, and a bit higher than RMB 89.6 billion in Q4 2023.
Solid numbers.
And their outstanding loan balance remains steady at RMB 137.0 billion, showing year-over-year growth from RMB 127.7 billion.
How about their profitability in Q4?
They maintain their strong profitability. Total net revenue hit RMB 1,972 million. That's growth compared to both the previous quarter, RMB 1,825 million, and a significant jump from RMB 1,150 million in Q4 2023. Non-GAAP net income came in at RMB 4,482 million. Up a bit from Q3 2024, RMB 4,370 million, but actually slightly down from the same period last year, RMB 4,496 million.
Interesting. A slight dip year over year.
It's worth noting, but the overall picture is still very positive, and platform services continue to be a big contributor to their loan facilitation volume, making up 53.2% in Q4 2024.
What about their operating expenses? Any trends there?
Their sales and marketing expense, as a percentage of loan facilitation volume, continued to go down, reaching 5.8% in Q4 2024. That's down from 6.2% in Q3 and 6.4% in Q4 2023. So their marketing is getting more efficient. Facilitation, origination, and servicing expense stayed consistently low at 0.82%. General and administrative expense ticked up a bit to 0.17%, and user acquisition costs rose to RMB 312 million, but were still lower than the RMB 326 million in the same quarter last year.
So overall, a pretty well-managed expense profile. Now, last but not least, what about their risk performance in the latest quarter?
The charts they show on D1 delinquency rate and 30-day collection rate generally point to a positive trend in risk management. The overall picture suggests they're effectively managing credit risk.
Great. So let's wrap this up. What are the key takeaways here for our listeners? What have we learned from this deep dive into Qifu Technologies' 2024 performance?
I think we've seen a company that's really delivering. They had a strong 2024, and that success seems to be driven by some pretty sophisticated AI technology, a smart focus on serving underserved markets, and a clear vision for the future. They've grown their user base and loan volume substantially while remaining profitable and maintaining stable asset quality. That's impressive.
Absolutely. And the role of AI in their business is remarkable. It's not just about credit assessment. It's woven into everything from marketing to customer service. It gives us a glimpse of where the whole fintech industry is heading.
Couldn't agree more. This presentation is a really interesting look at how AI is changing the game for financial services in a major global market.
And on that note, I'd like to leave our listeners with something to think about. We've seen how AI platforms like Qifu Technology are transforming access to credit in China. But what other industries do you think are ripe for disruption by AI? What other areas are likely to see this kind of transformative impact? That's something worth pondering. Thanks for joining us for this deep dive.